And yep, we're live. All right, so we're gonna do a little technical analysis on Tesla. We're gonna this is gonna be new on our page, breaking down some TA price analysis to see where we're at. So, question is, are y'all ready? Right? Are you ready for Tesla to move to 700? Because that's what we're looking at. Upper leg end of the year. We got 6 months left, right, to end the year. Tesla usually has two big pushes in the middle of the year. We had one earlier this year, right? We had this big push from, let's see, I guess it was at the end of last year. So we really haven't had one this year. We had a small push after the April lows, but we're gonna do some TA. So this is what we're looking at here. You see this wedge pattern? That's the breakout. That's the breakout we're looking for, which is price to break above this wedge pattern. That's what we're aiming for. All right. So I hope y'all ready for this. Are you positioned, right? Are you positioned? Are you ready for Tesla to go to 700? I've been telling a lot of you guys, keep your eye on Tesla, get some Tesla, because when it comes, when the wave happens, it happens. It's going to be explosive. Then you're going to be chasing it. So just be prepared so you don't chicken out. Investing is all about faith, right? You're exercising your faith in the future. So basically we have this big wedge pattern, but let's take a step back here. Let's take a step back, look at the big long-term time frame. And what usually we get here is consolidation breakout. You get five years of consolidation, then you get a nasty rip higher. Why? Because investors are pricing in the future, which is Tesla's been working on next generation technology. Optimus bot, robotaxi, self-driving cars. And as time goes by, we get closer to that reality. The Fed's going to have to cut rates because it's a capital intensive business. And once they cut, you're going to get a flood of capital into the stock, right? So we're near that breakout zone again. Now, we peaked selling some NVIDIA for Tesla stock. Oh, what up, Dustin? What up, Dustin? I guess this is for you then. NVIDIA is great. Don't get me wrong. But the upside right now is going to be in Tesla stock going forward. That's where all the upside is, right? And is there any promises? No, but you're exercising your faith in what's about to happen, especially that it's so quiet. It is so quiet right now. That's when you got to pay attention. So Tesla's now in this uptrend that we started back in February 2023, right? 2 years ago, we're in an uptrend. It's actually up from that low quietly. It's up 250%, a quiet 250% upside, right? And this is when it really bangs out. So our last move, we were consolidating. We had resistance around 275. Boom, we moved quickly, 80% in what, 30 days? It was quick. It was quick, but we're in an uptrend now. We're getting ready. You see this diagonal pattern. We're getting ready to break to the upside to the top of this trend. I think we're headed for about 700, right? By the end of the year. It could be more than that. I mean, 650 was my original target, but you might get a blow off top to about 700. Who knows? It's going much higher from here, right? So you're basically just going to take off to this trend. You're looking for somewhere around here. See, where's our 700 mark? Yeah, about right there. How much upside is that from today? It's about a double. That's what Tesla does. It pulls back 30%, 25, 30%, and then it doubles. 25, 30%, and then it doubles, right? Been watching. I probably have seen this stock more than any other stock in the market. So, for example, right, look at this. 30% pullback. Okay, you had a 30% pullback. From there, you're up 165%. Now, this was a big pullback. This was 50%. So now we're already up 60. Let's say 220. So we'll see, but we're in a breakout zone. This is what we're looking at right now. Let's go ahead and look at, so let's just focus on the pattern first, right? The wedge pattern is a very strong pattern. Looks like a sideways triangle. I call this a dragon wedge. It looks like a dragon's head. And it's basically like a spring. Think of it like a spring just compressing, compressing, compressing. Eventually that momentum has to resolve to the upside or to the downside. And today, it looks like we're resolving to the upside. What is some of the catalysts taking this higher? Well, we have a lot. We have a lot of catalysts, but for the most part, the macro is bullish. This is the most bullish environment in history, probably, with Trump's tax cuts, with AI. Tesla's the #1 physical AI stock. Okay, but what are we getting? Autonomous vehicle regulation. Deregulation is going to be driving Tesla higher, and interest rate cuts. So two things: the Federal Reserve cutting rates, and the market doesn't wait for the Fed to actually cut rates. It's pricing in the probability, and if that cut tips over, boom, the price takes off, and the probability is rising because employment is weakening. The labor market is weakening. So they're going to be cutting in September unless we get a surprise, which could be tomorrow. We have inflation. Inflation could stall this rally, right? The inflation report could stall this rally, but if it comes out as expected, boom, Tesla's gone. Rates are going to fall and Tesla's out. Number two, we have autonomous vehicle, robotaxis, and where? I think they're also in Europe, right? They're registering for robotaxis in Europe. In India, where's the India news at? They're going to be in India. I believe they're building. I read this earlier. I couldn't even find the news now. I wanted to focus on the technicals, but they're building in India. So they're getting licensed in India for robotaxi. They're also building the supercharger network. This is going to be a global company, international global company, physical AI, reducing the cost of travel and energy. And then the big banger is the Optimus bot that's supposed to be released in 2028, right? Humanoid robots. Don't matter what you think, they're coming, right? So we got the big push higher. Now let's look at our momentum indicators. So that's our breakout right there. If we'll do Fibonacci a little later. Okay, momentum indicators, let's take a look at them. We're on the daily, we're looking at the daily RSI and the daily MACD, right? We're above that halfway mark. So we're starting, and we got above it twice, but Tesla's tough. Now we're really starting to just straight shoot up, right? Market's at all-time highs. I think we might get a pullback, but August is probably going to end strong. There's a lot of FOMO. VIX at 15. All right, let's not get too deep into the internals. We have the RSI lifting. Now, Tesla's one of those special stocks who can take off regardless of the market, right? NASDAQ is down, S&P is down, or sideways, Tesla still rips higher. It has its own narrative. It's carrying its own theme because it's so differentiated from the rest of the market. So our RSI is starting to pick up. We have our MACD barely rising higher. That's on the daily time frame. If we go to the weekly, we're above halfway mark. So it's only a matter of time, as we've been saying. What are we in? We're ending summer, right? So it's a little late. It should have broke out. Usually it breaks out in July, June. But the longer the consolidation, the bigger the breakout. So that's what we're looking for here. Back to that daily chart. Let's do some Fibonacci. We're going to stay on this daily chart. I got the wedge here. Just look at that wedge. That's that wedge pattern is the spring. Is the more that we push above it, the faster the momentum picks up. It's going to start gapping up. We're going to start seeing gaps up overnight, and then it's gone. All right. So if we do our Fibonacci extension, we're going to go from, we'll go from the lowest low back in April, bring it to the, the swing high, swing low, swing high, and then we'll come to the low. So our first target is like 468, right? Pretty much the high. That's the first target, 468. And then when we really, if we get more macro push, if investors are very bullish, if there's nothing holding us back, we're going to move up to about 650. If we blow off top, which we could, but I don't think this happens till the end of the year. I think we get 2 pushes. We're going to get one maybe end of August. That's what it's looking like. Big push in the end of August. We'll probably consolidate September, October, and then November, December. I mean, this is all probability. Boom, we take off for that second leg. And I think we end the year above 600. Somewhere above 600, above 500. You want to be conservative, but this is very bullish. Very bullish market because liquidity hasn't even entered the market yet, right? So that's what we're looking at for here. When we go, let's go ahead and take a look at, so that's our Fibonacci. Let's take a look at our Bollinger bands, right? This is what got me excited. Check this out. Bollinger bands are like rubber bands, right? And once the rubber band hits the road, no, I'm just kidding. Sounds good. But once the rubber band really hits the upper limit, once you touch that upper limit with momentum, then pretty much the rubber band it's taken off, right? It's starting to extend. That's your signal. That's the first signal. So we're probably gonna get a pullback to the blue. Sometimes we did it here, and then you just start ripping higher against the red. So we're against the red. That is level 1 signal. Look at, we didn't reach here. We didn't reach it here. We almost got there here. Now we're actually above it. We got a little overextended actually. So we might just run up straight to break this previous level, or we pull back into the blue line. So 2 scenarios here, right? What's our blue line? We're somewhere around 320. We're looking at 320 and 350. So if we go to let's go to the 30-minute chart. This is how I would look at it. Okay, let's go to the 30-minute chart, and then let's go ahead and take the Bollinger Band off. Let's look at this 350. 350, I think we break out. That's probably where we break out. 350 to 320, right? That was yesterday's low where we just exploded. So if the VIX spikes tomorrow during the inflation report, right? If the VIX spikes, I wouldn't doubt Tesla comes back down to 320. And the VIX might spike regardless, because the VIX is just investors saying, okay, we're fully invested. Too much negativity. Let's take some profits in the entire market, right? Tesla's part of the index, is going to pull back. So I think we come back to 320 and then we launch higher. That's a possibility. We don't know. It might just go to 330, right? But I'm going to say 320. Maybe it goes down to 300 again. I don't think it's going to be that bad. This is a very strong bull market. 320. So I'm going to say 320. Now, if the inflation report is solid, right? If it's a pretty solid report, we're probably going to gap back up, retest 346, which was the high today, and then we break over 350. Either way, the probability of us breaking this triangle pattern, this wedge pattern, which we're already violating it, so we're kind of in free fall to the upside, right? We're in rocket mode, whatever you want to call it. The probability of us retesting 365 is very high, right? You get above 365, boom, we're going back to all-time highs right after that. We're going back to 480, 485. Could take a couple months, could take 30 days. We don't know. So our main catalyst are, well, technical breakout. Number 2 is robotaxi is expanding across the US. The regulation is happening. I don't know how, I already know it's coming. So I'm not like, oh, looking at every article. It's just a matter of time, right? They're registering. Now they're in India. They're already in Europe. This is going to proliferate throughout the market. And then you also have Model Y, some stuff going on with Model Y. Let's see, we can read some of this news. And then the big part 2 is just the macroeconomics, right? Interest rates are long-term interest rates are falling. They're just continuously falling, right? So we might get a push higher on interest rates tomorrow for inflation after inflation, because interest rates are watching the inflation report, but there's too much deflationary forces happening. Tariff inflation just hasn't came. There's too many levers there's too much productivity and automation happening for inflation to really pick back up. You're going to be told this the entire layer. Inflation might come back. It's all political. It's mostly political. You're not going to get inflation pick back up and the market's going to tank unless you have oil prices, take off. How is that going to happen? Does it look like we're getting oil prices break higher? Does it look like we're going to have a war somewhere? Nah. The Russian-Ukraine war already peaked. We're just trying to shut it down. It's not driving oil prices anywhere. They're falling, right? This trend is lower. So that means rates are coming down. That means Tesla's business is going to increase in margin. That means investors are going to start leveraging in with calls and leaps, right? And physical AI is going to take over. This is the #1 robotics company. The dollar's getting debased. The setup is here, right? The setup is here. I'm just watching the VIX. So I know we're a little all over the place. This was a last minute thing. I didn't think it was going to break out today, but we're starting to break that wedge pattern. So just real quick, VIX 20. This is the long-term average for the VIX is 20. We're looking at these 2 levels. So between 20 and 15, this is pretty much our range of fear. Now, counter to what you might instinctually believe, when we're at 15, you might actually want, because this is the lower limit, you actually want to see, you actually want to be a little light. Now, Tesla's different, right? We don't know. If we break below this, then it's more, the probability Tesla just continues to rip is very high. Now, if we pull back to 20, which we're going to get eventually, we're going to get this pullback to 20, especially if that inflation report is higher than expected, which, I don't know. I don't think so. I think the market's going to pull back a little bit. We're going to get a reset on the VIX to the upside. You want to buy you got to buy the VIX. We told you this last time. If the VIX gets to 20, you want to buy the VIX, not literally the VIX. Okay. This is not financial advice. I'm not saying buy the VIX. I'm saying if you're leveraged, right? If you're building a position, that price is going to fall, and the peak is usually around 20. So you want to correlate that and say, oh, the VIX is at 20. This is probably a buy the dip opportunity, right? Not at 15 though. 15 is resistance. So I actually think we're going to get a correction in the market. Okay. And this is kind of counter to what we're seeing with Tesla, but Tesla's already breaking out. So it's just a warning sign, right? Maybe it doesn't break out tomorrow, or maybe it doesn't continue tomorrow, but the pressure is there, right? The pressure is picking up. You see this RSI, boom, higher. You see the MACD rising. So yeah, that's too much pressure. That is way too much pressure. You'll see. Just pay attention. Over 350 though. I'm going to say over 350. Once we get above 350, it's pretty much lights out. A lot like BMNR, we called out the other day. BMNR is breaking out. It's probably going to consolidate. Ethereum needs to consolidate a little bit. Also, check this out. Tesla also runs up with Bitcoin. When Bitcoin rises, Tesla seems to move higher. They're correlated. They do hold some Bitcoin. Okay, they do hold some Bitcoin. Not like MicroStrategy, but they do hold some Bitcoin. So we're looking at this uptrend, and I think we're just around that period where, you've been told enough, hey, you want to own some Tesla, you want to own some Tesla. Are you going to get an opportunity again, maybe in 6-7 months? But you never know. Once this thing breaks 500, it might just go to 1,000, right? You might have to chase it. You want to increase your risk reward here. You don't want to be chasing it, buying higher. It just makes you uncomfortable, right? The trend is starting to break. It makes you uncomfortable. Nobody wants to buy much higher. Why would you buy a house when the prices are increasing, right? And if you're unsure about Tesla, well, then do some research. It's inevitable. Robotaxi is coming. It's the Optimus bot though, right? That's a $10 trillion revenue opportunity in, the next 10 years. It gets priced in right away. Okay. So that's coming. But this is our zone. 350. I mean, you can go ahead and look at this and say, oh, 365. Sure, 350, 365, but I think that's what we're looking at here for the breakout. The monthly chart's pretty clear, even if we get rid of some of this. Okay, and some of you that are already aren't familiar with charts, when you see this kind of triangle pattern, it's very juicy. It's very juicy, and you're like, oh well, what are we looking at here? You're looking at a breakout. That's what you're looking at. Okay, that's the snake right there. Okay, so what's actually going on? All right, so India supercharged rollout, key drivers. Here's our key driver. So they basically announced that they're expanding into India, right, which is a multi-billion-dollar market. The Indian market is not penetrated by any US. A lot of these tariffs are opening that up. A lot of these trade deals are opening up the Indian market, where what? You have 2 billion people? You have the most people in the world in India? How much revenue is that? That's a big market. Now that is a big market. What else? We got the technical breakout over the 200 daily moving average. I wasn't even looking at the 200 daily moving average, but we can go ahead and look at it. Moving averages are what? Our average price. We're holding above that average price. We had support here, and now we're starting to lift off. That's our simple moving average. What is that? Our 50. So if we go to the 100, I think we're pretty far above it. We're above all the monthly moving averages. Let's go to the weekly chart. There's a lot of good technicals here. There's a lot of good technicals. I like to look at the momentum, but you can see where we had a triple golden cross or double golden cross where the 50, which is the skinniest black line, this is the last 50 days of price action on average, right? If you look at the last 50 days, so what, going back, who cares? 50 days. It's crossed above the thicker lines. Right here, we had a couple crosses above the thicker lines. That's our signal that momentum is picking up, that price is on average rising higher in the short term than it did in the longer term periods. So investors are picking this up. Institutions, doesn't matter. So we crossed above both those lines. You also had the 100 cross above the 200, double golden cross. Well, this is why we call it a triple. The 50 crosses the 100, that's one, crosses the 200, that's two, and then the 100 crosses the 200. I know that's confusing, but you got a triple golden cross, okay? And we formed a wedge pattern right above that, a mini wedge, okay? Mini wedge pattern right above that 50-day. Well, this is the weekly, the 50 weekly moving average. Now we're starting to violate. Now, I wish we would have held, at the end of the day, but the pressure's close. Maybe it takes 3 or 4 days. We're going to break out though. Might take 3 or 4 days, but we're going to break out there. Let's go to the daily. What does it look like on the daily? Same thing. We're above all the moving averages on the daily. Now, we did this a couple times before, but you can see the 50-day moving average was below. So the momentum was still dragging the price down. Now the momentum's up. Right? Now the momentum's up. So we're now starting to pick up. The 50-day doesn't look as good. Let's go to the Oh yeah, there it is, the EMA. Let's look at the exponential moving average. And the EMA is about to take off. I mean, look, even if it doesn't break out tomorrow, because we do have the CPI report, like I said, it's coming. It's coming. We're getting very close. We're getting very close. So this looks really good. Bollinger Bands. All right. So what about our anchored VWAP? Let's use our anchored VWAP volume weighted average. And yep, pull from the top. Okay, so we're above the anchored VWAP. So this is, from the last high, from the previous high, are we above or below the average price in terms of volume, right? How much volume was put in the market? We are above that. Let's drag it closer. What about this high? Yep, we're above all of them. We're way above the low. I mean, there's so many bullish. There's probably about 9 breakout indicators that are flashing on my screen. I want to say there's about 9. Right. And if you want to use Fibonacci retracement, here's what we got. Use the trend based fib, pull from the swing low, right? Swing low, swing high, and then back to the lows. And then I always target the 1. So we're looking at 750, 760 on the weekly chart. Now, how long does this move usually take? Before we went about 6 months, 7 months, we've already been in from the high or from the low. We're already in about 4 months. So probably to the end of the year. Yeah, we're targeting the end of the year around 575. I mean, it's irrelevant. The gray box, though, we're headed for that 1, right? And then, I mean, if you are really bullish, you're looking at 1,000. But a lot of people don't want to hear that because they're like, oh, that's too bullish. Do you understand what Tesla's doing? I don't think so. You probably don't understand what they're doing. Okay, what else? What other indicators do we have? And that's just a very bullish pattern. See what else we got. Stochastics. I mean, I think I have stochastics on another layer. Let's look at the overall market. What about market breadth? What about market breadth? All right, so yeah. Now on the index, I would be a little careful. Here's the downside, right? The market is kind of preparing for the overall market is preparing for a small correction. That's what I see all over my radar. Um, when it comes to fund managers, they're pretty much fully invested. This can be tricky. They can be fully invested for a whole month or a couple weeks, but they're pretty much fully invested. When we look at breadth, this is the amount of stocks holding above the 50-day moving average. So how many stocks in the market are trending above their previous 50 days of price action? How many? We're, and we're above 50%. So that's good. We're above 50%. So we're bullish. But you can see here that the actual index is at highs. Watch, we'll go to SPX. How correlated is this to Tesla? It's kind of just giving you an outlook. You see how we're retesting the high? The market is retesting the highs, right? But breadth is not. Okay. Breadth is not even close to the high. So that tells me that investors are dumping a little bit. This is either a rotation into another sector or the market is deleveraging altogether, right? Going into the CPI tomorrow. We don't know. We don't know. So you still got to be cautious, which is why I'm saying, hey, if you do get a pullback in Tesla, the fact that we're above this 335 level, all we would do, here's what you're going to look for some of you traders or who are looking a little deeper. Let's take off this fib. All you're going to look for is see if I can take off the we're gonna do a gap fill, right? We're gonna take off the trading. There we go. So it's just gonna fill the gap. So if we do break down tomorrow, you want to see this big gap here. You see this gap up. This is just an overnight pre-market gap up. We're gonna come down to 329-ish, somewhere around here. It's gonna fill that gap. That's another good buy. Now, if it gets below the gap, then you're less confident. You don't want to be sized up as it falls. You want to be sized up if it bounces here. So that's what I'm looking for. I already have a leap call on. I'm looking at 2026, by the way, not financial advice. I'm looking at I think I have 650s debit spreads 2026. Okay. So here's what we're looking at. Boom. We retest 329, 330-ish, whatever. We start to move up. That's your confirmation, right? It's going to consolidate. And then as soon as it breaks above that consolidation, you put your stop at 329, 328, whatever. That's how I'm doing it. That's how I would do it, right? I'm not telling you what to do. Otherwise, this is so bullish. I mean, we're climbing now. Otherwise, you're looking at the break of this, right? You're just looking at the break of this. Well, we'll see. We'll see what it looks like tomorrow. We'll see what it looks like tomorrow. Maybe we can find some price action that looks similar. I'm not sure there's a whole lot of traders on here. Possibly. There's different types of traders, right? I'm not day trading, but there is a very clear price action signal for Tesla. Here's another way you can look at it. Another way you can put the anchored VWAP where we gapped up this morning and see if we just hold it. We didn't hold it today, so we need to get above this anchored VWAP. Or at least hold the last 2 days, right? Could do that too. We spent a lot of time on Tesla. I mean, my whole message here is, hey, look, you got to look out for the breakout. You only get this opportunity twice a year. And if you are trying to hold, you're in a better position trying not to trade this. You just want to hold it. It's getting close, right? It's been consolidating for 5 years, right? 5 years consolidation. It's looking a lot like it did back here. And also it's eating up all the negative news, right? You hear negative, and the stock is still climbing. That tells you the market's already priced it in. It doesn't matter. It's irrelevant at this point. We're in the uptrend. We are now in the uptrend. You got to stay patient here, right? Just zoom out. You're in a monster uptrend. Go to the monthly chart. And you'll be, yeah, we're zooming higher. It's just trending higher, like higher lows, higher lows, higher lows, higher high, higher high. What do you think is coming next? A higher high. I'm going to say between 600 and 700. Who knows? Who knows? I mean, and we might get a hyperbolic move. You know, you could get this hyperbolic move where it's game over. It's just like Nvidia. You're not going to, at that point, you don't even want to buy it. It's too much. It's up too much, especially when it doubles. So I think we double. I think we're heading for a double, somewhere around a double by the end of the year, maybe early 2026. It really depends on how the macro picks up. How does the macro play out? Well, let's dive into the macro. Okay, what are we looking for when it comes to macro? Number one, okay, we want rates to stay below 4.5. What keeps us there? Why? Because interest rates are the cost of capital to the market. And as long as rates stay below 4.5, we're solid. We don't need to be, you know, rates don't need to go to zero. They just need to stay in this range so they're predictable, right? So the interest payments are predictable. Tesla's a macro trade. This is a macroeconomic trade. These are economic trends that investors are looking at to stay long Tesla. It's a capital intensive business, robotics, industrials. So it's going to take a lot of financing, right? Tesla takes a lot of financing to run the business. It is not a software business, even though it is. It's also capital intensive. So rates are important. Now, when it comes to the Fed, we're looking for that rate cut in September. Let's go USINT, add that on there, right? So you can see that rates, when it comes to Fed rates, we'll just put these on the same side on the right, because I like to do macro too. We looked at the technicals, they're super bullish. So does our macroeconomic trends support the technicals? Right? Does it support the technicals? Well, interest rates are really trying to front run the Fed. The Fed is here, right? This is the Fed, the purple line. Let's just turn it black. Right? Fed is here. They're paused. They've been paused since December 2024. And let's take a look at this. December 2024. Let's look at Tesla, December 2024. What happened? Okay, December 2024. Let's just highlight this. The market, here's the first rate cut. The market, Tesla ran up into the rate cut. Okay, that was the peak. That was the peak. Don't get me wrong, but it ran up before the rate cut. And I think we're going to see that. Of course, it's like, oh, why didn't it keep going higher? Well, because, I mean, this was also, there's other macro going on here. This was December. There's a blow off top in the market and we got tariffs. That was the issue here, right? Tesla would have broke out and kept going, but Trump levied heavy tariffs. He was promising, you know, that was the beginning of the tariff crackdown. And so Tesla couldn't hold up. It just couldn't hold up. But it ran up into that rate cut, December 2024. That's what the markets do. They don't wait for the damn rate cut. I know people are telling you that. They don't wait. They price in the rate cut. So what does that tell us? If rate cuts are in September, we don't know this. August, September, the market's going to break out to chase the damn rate cut. It's going to chase the rate cut. And then when the rate cuts actually come, then the market sells off. And those who are behind, they get caught trying to buy the rate cut. And then they get pissed off and they sell out the lows. And the market finds support and goes higher. As long as inflation's not picking up, as long as there's no macroeconomic uncertainty coming into the market during that time. So we're going to chase the rate cut. I'm telling you, what's the probability? 75%. I've seen it too many times. We're going to chase that September rate cut. And if it happens, we pull back. If it doesn't, we pull back. It doesn't matter. We're trending. Markets trend. And Tesla is trending higher. And we're at a breakout zone. Okay. So anyways, the macro is important. So going back to, you know, interest rates, we're waiting for that September rate cut. What's the other thing? The ISM. See if I can find the ISM cycle. Well, you know what? Let's just go to the actual macro data. Okay, the money supply is moving higher, but that has a lot to do with the Fed. We're looking at this ISM. Make sure I get this. We're going to be looking at no, not we want manufacturing. We want manufacturing. This is important. This is going to be determining a lot of Bitcoin's price action too. Not determine. I don't want to say it determines it, but this is something you want to pay attention to because it is all business confidence. No, not that one. Where's it? Where's the damn ISM at? Here it is. Okay, let's all right. Let's copy this. Look at this cycle. Pay attention. Actually, we'll just put it here first. Okay. So this is our economic cycle. Now we're doing a little bit of macro analysis other than technicals, but you can see how this trends, right? You can see how we up, down, up, down. Well, we've been in recession territory for the manufacturing cycle. These are the capital intensive industries, housing, industrials, right? We've been in a recession for the longest time in history for the ISM. And just when you think of ISM, you know, it's kind of irrelevant. You got to take the course. I mean, you don't have to take the course. You can look up ISM. There's not a whole lot of data on YouTube that's clear. I have a course that explains it and makes it relevant, right? Go check that out. But the market moves in cycles. Now, the software companies, they don't really rely on the ISM too much because they're not really borrowing as much capital, right? Especially if you're a Magnificent Seven or you're getting, you know, they don't rely on rate cuts as much. But when it comes to manufacturing businesses, housing, industrials, trains, whatever it is, they, you know, you need business confidence to actually do orders. So this is ordering, this is employment. We thought it was going to break out, didn't happen. So this is the cycle we're waiting. It hasn't even started yet. When you peak, that's the end of the cycle. This is where the S&P peaked in 2021, right? When the ISM peaked. If we go back to 2018, I remember that cycle. We peaked around this cycle. So once you peak and you roll over from the ISM, now we're headed into you don't want to be long. You don't want to be long stocks that are growth. You want to be long defensive stocks. Right now, we're in the early stages of an upcycle. We're still early stage, right? Don't believe these fools talking about we're in late cycle, employment's going to roll over. Hell no. Employment is softening, and that's going to trigger the Fed to cut, and that's going to trigger liquidity to ramp up. That's you know, Trump has already found a buyer for the debt so he can keep printing. Did we not forget that the biggest tax cut in history is not trigger? I mean, did we price it in? Sure, but the biggest tax cuts in history start in January. Are we going to be blind to that here? There's more money coming into the market in January, right? So even though you're hearing, oh, tariffs are going to hurt margin, investors don't care. They care, okay, well, how can margins go up? Oh, and revenues are going to go up because next year we have rate cuts. So you cannot be pessimistic here. The economic cycle is picking up. So Tesla is tied to this cycle, and so is Bitcoin. Check this out. You're going to like this one. Let's turn Bitcoin into, actually, we got to turn it into a log. Okay. All right. So let's turn Bitcoin into a, let's turn it into a black line. There we go. All right. So look how this matches up, right? In 2017, now they're calling Ethereum, they're saying Ethereum is going to run like Bitcoin. Bitcoin ran up because of liquidity, because it was exciting, because of adoption, because there were tax cuts back in 2017 also, right? But the ISM, once the ISM peaked, there was no more momentum, right? There's no more momentum. Now, Bitcoin has a different narrative now. My point is the ISM cycle, okay, is very correlated to risk assets. Same thing here. Bitcoin peaked early, 2021. ISM peaked. Now, Bitcoin tried to make a second run, couldn't get up. And I'm not saying it's solely because the ISM rolled over, but momentum, businesses were no longer ordering or employing, they were at the peak. So they were deleveraging their businesses, and that's less money flow into the market. And we had inflation starting to pick up. So it was game over, right? Now look at Bitcoin. Bitcoin's exploding, separating from the ISM, and the ISM hasn't even picked up yet. So we have a long way to go for Bitcoin, right? But now this is about Tesla, because we already know Bitcoin's taking off. We're at all-time highs. But I'm telling you, Tesla is coming next. Tesla's coming next. So you got to watch this ISM cycle. What are we at? 40 minutes. All right. I don't want to make it too long. Any questions out here? What do we have at the bottom? We have market breadth, rate cuts, the VIX, bond yields, oil prices. Yeah, the macro is perfect. The macros, this is a nice macro setup. Very nice macro setup. So far, so good. I think the Qs made new highs today. And then, kind of got hit. All right. Well, let's do a refresh. What are the most important levels for Tesla really quick? Okay, what are we looking for? Let's go ahead and get rid of this. All right, so first and foremost, technically, we are breaking a triangle wedge pattern. Okay, we're breaking out of the wedge pattern. This is a spring that is now starting to, is being compressed, and now that spring is uncompressing, right? It's starting to lift. So is this confirmed? We're headed straight for 600? No. But what it tells you is that's one more confirmation that the gears are starting to ramp up, right? We're gearing up for a monster run in Tesla. We're gearing up for a monster run in Tesla. Did we have the spring before? Yeah, we did. This was a little different though. Look at this one. This one's flat. This was this is an ascending triangle. Same thing. It's a triangle pattern. Okay, it's a triangle pattern, but this one is flat. And what's the difference? I mean, there's not much difference other than how you trade it. It's still a triangle compressing pattern, right? Let's go back even further. Check this out. Here we go again. This is a little bigger, right? And this one didn't finish. Same thing. It's compressing. See how price starts to compress and then it rips higher. Let's go back further, because I've been watching Tesla longer than any other stock in the market, and we know how to trade this, right? Here's another triangle. Here's another wedge pattern. Broke higher, right? It didn't last because we had a nasty environment. This was the bear market, right? But if we go back to when Tesla first ripped higher, it's nothing but wedge patterns. And this is what I wanted to point out here. Look at this wedge pattern. Another one, right? Price is compressing in a triangle, boom, breakout. And then it forms a bigger wedge pattern, breakout. So that's what it does. It wedges and it breaks out. It wedges and it breaks out. There's many wedges down here. If we go even further, we dive a little deeper. Look at this, another wedge pattern. This is when it really ripped. This is what got me in the market. This is when I stopped looking at Warren Buffett's and say, you know what? Warren Buffett has good principles, but I'm not buying Coca-Cola. It's a waste of my damn time. I'm not going to wait 10 years or 15 years to see 100% gain, right? So another wedge pattern breakout, right? You want disruptive technology in the liquidity cycle. That's how you get the biggest gains. That's how you make the biggest gains. You're concentrated in the future. You want to play it safe? Great. If you're wealthy, play it safe. But if you're not, what are you doing playing it safe? You got to take risk in life. You're not going to be great taking no risks. There is no such thing as not taking a risk. Every time you drive, you're taking a risk on the highway. You got to get comfortable with it. You got to time it, right? If you want to be great, if you want to be special. If you're not, then that's fine. You can be normal. There's nothing wrong with that. I always say that. But if you're trying to invest, you don't want to get caught with inflation, right? You don't want to be getting debased and fooled. You want to optimize your you want to optimize your finances, right? Who doesn't want to grow their wealth? They're lying if they say they don't. They just don't want to put in the work. But you got to be disciplined. If you're investing, you have to be disciplined. It makes you more disciplined. There's something in the future that you're aiming at, right? You're going to have faith in something. You have to take the risk. There is no faith without risk. It doesn't exist. And by the way, this is not financial advice. I'm not saying go buy Tesla. I'm just showing you a process, how we look at the market, right? This is even bigger wedge pattern. I mean, these wedge patterns are gigantic. This thing is really, I'm telling you, this is a huge breakout. This isn't just this wedge. This is a huge wedge breakout. So we have a big, we have a long way to go from here. What else we got? Well, if you want to go a little deeper, the breakout usually happens for Tesla. Are we on the daily? Let's go to the weekly chart. We'll keep those wedges up there. Okay, we want to be holding above the EMA. What EMA do I have on here? Okay, I have the 24-week EMA. This one's kind of wide. Yeah, we've been straddling that. Okay, let's go to the 50-day SMA or the 50-week SMA. I think that's that one's a little. Now we'll go to the daily. We'll zone in a little deeper. So you have the wedge patterns. We're gonna take off. We're gonna take off the 200. No, we're gonna take off the 100. We're just gonna do the 50-day crossing above the 200-day. Okay. So when we go back in time, you had the 50-day cross. Now we're in momentum, right? This was the COVID. Obviously, it broke down. That was a little different. But when you have these wedges above the 50-day, you're in the breakout zone, right? You're above the 50-day. So there's more people chasing the future when you form that wedge. So you want the wedge to be above the 50-day. Right? Same thing. This was a gigantic wedge pattern. I mean, look how big this one is, right? Big wedge, big triangle, breaks above. When does it break above? Not when the 50 days sloping down. You want the slope to turn up, and then it breaks the wedge, and then it supports the damn 50-day, right? The momentum, and then this thing explodes, right? Now Tesla couldn't do that here. So again, forms the wedge pattern, gets above the 50-day, then breaks out. But we're still, in the macro picture, we were downtrending at that point. So where's our next wedge pattern? I mean, here's another one. Here's another wedge. I mean, this is really a flag pattern. This is not a wedge. This is a flag. Same concept though. It's a technical breakout momentum pattern. When we get above that 50-day and break out of the wedge at the same time, then you lift. Okay. Here we just didn't do it. Same thing here. You're above the 50-day. So that's the question right now. Are we above the 50-day? Yeah, we are. We're above the 50-day moving average. It is sloping down. So we might have more time to consolidate. That just gives you more time to say, hey, should I pull the trigger or not? What am I doing? Greatest bull market of all time. You're breaking the wedge. You're above the 50 and the 200. The RSI, right? The RSI is picking up. The momentum indicators are picking up. I'm going to do more on this later, but I just want to point this out. Where do we at? 48 minutes. Okay, great. We're at 41 minutes. I'm going to do one last thing, our log. Okay, we're going to do our log analysis. And especially if you're just joining, you're taking the swing low. Okay, we can do two logs. We can do the most recent, which is going to take us 6 months in the future. So swing low, swing high, swing low, and then we're going to point at the one. So we're looking at 428, 430-ish, the fib one, right? Log. Make sure it's log scale. That's where I think we're headed first before we consolidate. And then we break out to the 1.618, which is going to be 525. And then if we get above 525 or this blue zone, then this all depends on the macro. This depends on how far rates get cut. Are we going to run into inflation in the future? We don't know yet. I don't think so. But what are we looking at in the future? Once you get there, I mean, your upside move is probably 680, right? That's probably the peak, I would say, going into early next year, maybe even late this year. We can get there quick, right? That's the short trend. Now, if we take a bigger move, a bigger fib move, let's take these SMAs off. Let's go from the swing low. Let's go to this swing low. Okay, this was our lowest low. And this was in what, April 2024. So it was about a year and a couple months, right? Swing high, swing low. Now our one is pointing at 563. Now I like this one better because we're in a macro regime right now, meaning the short term is less accurate than the long term. The bigger the view you take, the easier it is, the clearer the picture is, right? If you're in the short term, there's a lot of noise, but this is a clear picture. I'm almost certain we're headed for 560, right? I think we can get as high as, and I can adjust halfway through, but I think we can get as high as 775, 750, right? I'm going to be conservative and say, hey, we're between 600 in this blue zone. We're between 600 and 700. This is my zone. That's what I'm targeting going into next year, right? At least next year. So that's my view on Tesla right now. I think we are starting to break out, if not today. I mean, if not this week, CPI is a big one, then it's going to be coming very soon, right? Going to be coming very soon. So keep your eyes tuned. That's all I got. You guys stay blessed. Have a good one. Check out the content. I'm going to be making a video on Chainlink pretty soon, and we'll see how that goes. Keep your eye on XMNR. Okay, I'm not doing no more technicals. We're just focused on Tesla today. I'm going to be doing more technical videos when I see breakouts starting to really happen. So we'll catch you guys next time. Thank you. Stay blessed.